Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we discussed non-farm payrolls and why this number can have such a large effect on the markets. In today's lesson we're going to discuss another indicator which can create lots of market volatility, retail sales. So let's get started.
Okay, the retail sales number is released at 8:30 a.m. on or around the 13th of each month and is an estimate of the sales of goods by all retail establishments in the United States. These goods fall into the personal consumption expenditures category, which, as we discussed in our lesson on GDP, makes up over 65% of the U.S. economy. Although the number does not include anywhere near the data that's included in GDP, since this number is released for each month, where GDP is released for each quarter, it's closely watched by the Fed and other market participants as a timelier indicator of what is happening with the consumer. In addition to the widely reported headline number, the report that's issued along with the retail sales number includes a breakdown of retail sales growth by category. With this in mind, the report is not only a good indicator of overall consumer activity, but also for how different parts of the economy, such as automobile, restaurant, clothing, and electronic sales are faring. If you're trading a stock of a company which sells products related to one of the categories reported in the retail sales number, then it's obviously important to understand that what happens with the growth of that category is most likely going to have a direct effect on the price of the stock you're trading. For those of you who would like to review this report, I've included a link to the latest report just below this video if you're watching it on InformedTrades.com, or in the description section if you're watching it on YouTube. Like many things that we're discussing, the retail sales number is not only looked at for its timely reporting on growth of a large part of the economy, but also for its predictive powers regarding inflation. A healthy economy should show strong retail sales numbers. However, if the number grows too quickly, then there is a danger that growth in consumer demand will outpace supply growth, causing prices to rise and forcing the Fed to raise interest rates to rein in growth. To predict how the market will react to increases or decreases in the retail sales number, an understanding of where the economy is in the business cycle, as we learned in our lessons on that subject, is necessary. If, for example, we're in a period where inflation is thought to be contained and growth is a worry, then a strong retail sales number should rally the market. If, however, we're in a high growth period already, then a strong retail sales number can cause market sell-offs as participants anticipate Fed interest rate increases to rein in growth. As with every economic number we study, remember that markets anticipate. So the market reaction will more times than not have a greater dependence on where the number comes out in regards to consensus estimates rather than how strong or weak the number is in general. If the number comes out in line with estimates, then at least in theory this should already be priced into the market, and therefore market volatility after the number should be contained. If, however, the number comes in off estimates, then you can see dramatic market volatility, the size of which is going to depend on how far the number comes in off estimates and where we're at in the business cycle. As with all the indicators we're studying, you really have to follow the number for several releases to get a feel for what the market is focused on and how it's going to react under different scenarios when the number is released. With this in mind, I'm going to be posting a discussion piece in the comments section of this lesson at InformedTrades.com the day the number is released, so we can all discuss and start to get a feel in real time for the number. If you'd like an email when that discussion begins, you can click on the article tools once logged into the forum and then subscribe to the thread, and you'll receive an email notification at that time. If you're watching this video on YouTube, I've included a link to the lesson on InformedTrades in the description section of the page, so you can join the discussion there as well. That's our lesson for today. In tomorrow's lesson, we're going to continue our discussion on economic numbers. So we hope to see you then. As always, if you have any questions or comments, please feel free to post them in the comments section below. And good luck with your trading.